Hello students, good evening and welcome you all to this session of pre-scene analysis for December 2022 SL1 and thereafter for all the strategic level examination papers, as well as specifically for strategic level 1 advanced business reporting in our paper. Students, Chandana sir as well as myself, we thought of discussing salient features as well as areas where you have to focus on in the exam. And also students, we wanted to familiarize you in terms of this particular pre-scene case study. Students, if it is a case study, examiner will provide you the pre-scene data, the information, and based on that, students, we can take our idea or take our opinion, our analysis to various aspects. So I think none better than Mr. Chandana Jagath Kumara with regard to the financial reporting is here, as well as students from my end. I will also coming with from audit, the corporate governance, as well as the risk management perspective with regard to this pre-scene. So students, this is a novel concept, novel idea that we thought of combining the lecturers together and doing this pre-scene analysis. So we will start with the financial reporting area, because I think from the syllabus also 55% of the weightage is being tested from that area. So over to Chandana sir. So start, and Chandana sir will elaborate first the reporting area.
So thank you, Nilendra sir, for the introduction, and then we'll move on with the financial reporting part. And you would have gone through the case study by now enough times, but we wish there will be connected question in the paper in the unseen. If not, all our efforts will go in vain. Now we will go through the case study, and also I have done a small presentations on this. And in the process of discussing this, we will also give you the areas which we think will be highly examinable. And those are our predictions. Predictions will work. Sometimes the predictions will not work, but that depends on the final examiner's perspective. But if you take the past sessions, and most of our predictions have worked well, especially in terms of consolidation. The nature of the structure which we think can be the most predicted or can be the area has been there in the paper. So you need to focus especially on the console question. Today we will not discuss any model question, no model paper, nothing as such. It's only just that we will discuss the pre-scene, and you need to get familiarized with the case study. And you need to know certain elements. You need to know which areas will be tested, and our predictions. And if you have certain problems, you can also share your concerns and the problems with us. We will sort them out. But now, following to these discussions, there will be separate sessions, and we will be discussing mock papers, and that will be notified to you by tomorrow or day after when the mock paper discussions will be. So today we will discuss only the case study discussions, not any questions or mock papers. All right. Now, if you see there are a lot of companies within the conglomerate, and that company Safeway Holdings was started for the first time in 1985 as a private limited company, and that was given in the second paragraph. It says 1985, Safeway Holding was started by a gentleman or an investor called Mr. Stephen Fernandez. Yes, Stephen Fernandez. And later this company has become a listed company. It has become a listed company, but there are some more companies. I don't think you will be able to remember all the names. You need not to remember. You need to be little familiar. I have listed all the companies given. And also there will be a separate, table which tabulates which company has been started by whom and in which year, and who the parent company is, who the main investor has been, and who, is heading the operations that has been given. So basically, the ultimate controlling party, ultimate parent company has been Safeway Holdings Private Limited, which has become subsequently a listed company. And, if you went through the case study, 50% of the share capital of Safeway has been listed, and they also have a concern just to reduce that 50% at least to 40%. So what does it say? We will come to that point in a little while. There can be sometimes share repurchase transaction just to minimize the number of shares being floated in the market, just to reduce the number of shares being floated in the market. They are going to, they might have some plans, some certain plans are underway so that they can repurchase the shares. If the shares are repurchased, you need to apply LKS 32. How to account the repurchased, reacquired shares? We call them treasury shares. And not only that, also the examiner will connect it with another area. What is it? Along with this share repurchase transaction, which is from LKS 32, presentation of financial instruments, he can connect it with EPS calculations. Now, if you see, EPS has been tested, as far as I can remember, in December 2021, but there is a chance of EPS LKS 33 being tested once again this time as well. Right. So we will come to that area in a little while. So the founder has been Steven Fernandez. The first subsidiary company was incorporated in 1992, and that was Safeway Fresh Mart Private Limited, to which Safeway Holdings Private Limited invested by 80%, and the balance 20 was invested by Albert Ediri Vikram. Now, almost all the companies in this diversified conglomerate have been fully owned subsidiary companies, fully owned. The only company where the parent company, Safeway Holdings, has partial ownership is this company. What is it? Safeway Fresh Mart Private Limited, where there is an investment of 80%. So if non-controlling interest has been presented in the consolidated balance sheet, and that non-controlling interest has to be attributable to which company? It has to be attributable to this company. What is it? Safeway Fresh Mart Private Limited. Then there's another company called Safeway Manufacturers and Distributors Private Limited, and that was set up in 1998, once again fully owned. Safeway Hotels and Restaurants Private Limited, that again has been set up in 1998. Fresh Milk Dairy Products Private Limited, it was also in 1998. Fresh Milk Confectionery Private Limited, and that again has been in 1998. SWHR acquired Coral Bay Nigambu Private Limited. That has not been a direct acquisition. It has been by another subsidiary company, SWHR, and it was set up in 1999. And they have started up, and there was a new move, and that was into power energy sector, but it has not worked the way they wanted that to work, and for certain reasons it has been resisted, and it has been, shortlisted. It has not been started. But some extra information with regards to that can be expected in the unseen. There is room for extra informations in the unseen to be given. We will see how it can be given, and we will also include certain questions in our mock papers on that. And also the most important part, among all these companies is another company, Express Mart Private Limited, and that has been acquired exactly on the reporting date 31st March 2022. And the examiner, having given a lot of clues, indications, and hints, he ends the case study leaving everything open. Leaving everything open. So I have a strong feeling the company that was acquired exactly on the reporting date can be the company which can be given in the unseen for you to do the consolidation. Now, console question can be an acquisition, but it can be sometimes, a complex group. I will give you the structure of the group. A lot of companies have been acquired not directly by the parent company. Safeway Holdings PLC, it has now become a PLC. And most of the companies have been acquired by subsidiary companies. So this being the ultimate parent company, you need to consolidate it from the perspective of the ultimate parent company, Safeway Holdings PLC. So if it has been acquired by another subsidiary company, obviously that will be a complex group. So you need to keep that in your mind, very important. And if you take the last time question, you can't expect the console question to be that easy. But is the passing rate satisfactory? No. The figures and the statistics are daunting. And it's embarrassing to share the passing rate with you all. But the paper has been so easy to do. Where is the problem? Problem is we will keep most of the answers within ourselves. You don't share it with the examiner. So the more you write, the better. It does not mean that you need to keep writing everything. No. So you need to basically, if you see the action verb in the financial reporting part, the action verb has been advising. Why can't you think that the examiner is a real idiot and he does not know anything about it? And you need to do this spoon feeding. If you do the goodwill calculations, why can't you give advice? When you advise, you need to give advice on each and every single bit of accounting, how the goodwill is calculated. Even if you take the contingent considerations, you need to say how it is worked out. So we are coming to that in a little while. So those are the companies that are incorporated. So how many companies are there altogether? And if you forget about hydropower plant in Haputale, altogether 1, 2, 3, 4, 5, 6, 7, 8, 9, altogether there will be 10 companies, but out of which one company is not in operation so far, all the other companies are in operations. So I feel strongly, the companies which the examiner will be highly talking about in the unseen will be hydropower plant and Express Mart Private Limited. So we'll move on. So the details are now tabulated. Name of the company, parent company, acquisition date, percentage of acquisition, shareholders. Safeway Holding PLC, parent, the ultimate investor has been Steven Fernandez, and it was established in 1985. Shareholder Steven Fernandez. Safeway Fresh Mart Private Limited, Safeway Holding has been the ultimate controlling party parent company, set up in 1992, and percentage of acquisition 80%. And 20% has been from another investor, Albert Ederi Vikrama. So once again, I must tell you, if you go to the consolidated balance sheet, we have non-controlling interest. In 2022, the value is 2738, and which value should it be? It's nothing but his portion, Albert Ederi Vikrama. Why? All the other companies are what? Fully owned subsidiary companies. Fully owned subsidiary companies. Also, I must tell you, very important, all these companies were incorporated by whom? All the companies were incorporated by Safeway Holding PLC. Now, in the acquisition of Safeway Freshmart, there cannot be goodwill. Why? It was incorporated initially. It was not an ongoing business at the time it was acquired. At the time it was acquired, it was not in existence. So, there cannot be a goodwill for a company which was not existing at the time of, it was incorporated by Safeway Holding PLC. Similarly, Safeway Manufacturers and Distributors Private Limited, it was incorporated by Safeway Holdings PLC for the first time. It was not in existence before that, so there cannot be goodwill. There cannot be goodwill. Now see, if you see the consolidated balance sheet, can you see the goodwill? In the consolidated balance sheet, the goodwill has not been given. In the consolidated balance sheet, the goodwill has not been given. Why? This company, Safeway Freshmart, a goodwill cannot be there because it was not in existence at the time it was acquired. Safeway Manufacturers and Distributors Private Limited, there wouldn't have been goodwill for that company either. Why? That was not in existence at the time it was acquired. Safeway Hotels and Restaurants Private Limited, there cannot be goodwill. Why? It was not in existence at the time it was acquired. Fresh milk dairy products. Now, the only company that was in existence at the time it was acquired was Expressway. The name of the company has been given at the end. It has been Express Mart Private Limited. Express Mart Private Limited. That company was acquired and it was in existence at the time it was acquired. But now, I don't think the consolidated balance sheet given by 31st March 2022 is including that company, because if that has been consolidated, the goodwill arising on the acquisition of Express Mart Private Limited has to be included, has to be shown in the consolidated balance sheet. So those are the reasons why I strongly feel that Express Mart Private Limited can be the company which the examiner talks about in the unseen, and that seems to be the company which is highly likely of being tested in the unseen, and that their financial statements will be given in the unseen. So you need to be ready. Now, this is the conglomerate, and I have also given you the nature of the businesses. Safeway Holdings PLC, they are in the business of importing and trading electronic items. Safeway Freshmart Private Limited, distribution. Safeway Manufacturers and Distributors Private Limited, electronic items once again, and some of them are into trading business, some of them are into leisure, some of them are into agriculture, some of them are into once again hotels and power and energy. Right. Now we'll come to the most important one. Let me take one by one and to give you my predictions and the reasons why I expect them to be in the paper. Right. Now, so this is page number 6 the first paragraph in page number 6.
There is a question from student Natasha asking, could Coral Beach Bay Nigambo
Okay.
will have a goodwill?
A Coral Bay, yeah. Yeah. Yeah, Coral Bay, it was acquired Coral Beach Bay Nigambo Private Limited, it has been acquired in 1999. Yeah, there is a chance of goodwill being, but what I am saying is this. If you see the balance sheet, I mean, the balance sheet has been for the individual company as well as for the group. Now, 2022 unaudited, but 2021 is the audited balance sheet. Does the audited balance sheet reflect the goodwill? No. That was either because the goodwill is fully impaired or there wouldn't have been a goodwill. Okay, right. Now, Coral Bay Nigambu either would have had a goodwill or impaired permanently, fully, or wouldn't have had a goodwill because it was incorporated by which company? Safeway Holdings PLC. So, current year balance sheet is not audited, but the last year balance sheet is an audited balance sheet. So, that does not show the goodwill. Why? Because either the goodwill has fully been impaired or there has not been a goodwill. Now, what I am saying is, the goodwill is important for two reasons. One, there can be separate questions on impairment. We will come to that point a little while. Or there can be a disposal questions. I don't expect disposal questions of any of the companies within the group. Why don't I expect a disposal? Because most of the indications, most of the clues and the hints given are in favor of an acquisition of a company that is Express Mart. Now, the pre-scene does not explicitly say that this Nigambo Hotel has been in existence before. Whatever it is, the goodwill has not been there. If you see the comparative balance sheet, the goodwill is not given. Why? You can have two reasons. Either the goodwill is fully impaired or there has not been a goodwill arising because Nigambo, that hotel, has not been in existence at the time it was acquired. So, those are the reasons. Current year balance sheet is not audited, so we can expect, there would have been certain mistakes, but last year balance sheet, the comparative balance sheet is the audited balance sheet, so you can't expect there to be mistakes. The goodwill is not shown there. Now, the examiner cannot give in the unseen there was a goodwill in this company. Okay, Coral Bay, you cannot expect the examiner to give extra information in the unseen saying that there was a goodwill for Coral Bay. No. Because the last year balance sheet is the audited balance sheet. I hope it was clear, Natasha. Okay. So, moving on to page number 6, first paragraph, as I said before, Stephen and his family members hold 50% of the stated capital of SWHPLC and the balance has been offered to the public. Stephen is not willing to give up any more shares to the public. He wants to maintain or reduce the public portions offered to 40% in the future. How can you do that? I mean, they don't want more than 40% to be floated in the market. So, you know the reasons. The more the number of shares that are in circulations, the higher the chances of the control being passed to another stakeholder, another party. So, that risk can be minimized by lowering the number of shares in circulations. That would have been the reason. So, that's a different matter. I mean, that's not we should focus on. What can be the financial reporting implications on that? As I said before, for you to bring this down from 50% to 40%, right? Now, for them to reduce the number of shares that are in circulation, they need to repurchase the shares. 10% they are going to repurchase. So, the examiner can set a, I wish we will get questions which are connected to the preceding. And if so, the examiner can test on how the treasury shares will be recognized in the financial statements, presented in the financial statements. It has been tested, in 2021 December. And even this time there can be a chance of that being tested once again. LKS 32 does not require any profit or loss to be recognized arising out of treasury shares. If you issued at 10 rupees, if you repurchase them at 20. And it's just that we will recognize the amount invested on treasury shares as a negative equity figure. And that is how that will be shown in the balance sheet. It has to be a negative equity figure. And that can be connected once again with another accounting standard like what? It can be tested, it can be connected with LKS 33. LKS 33, when you repurchase your shares, how does it impact on EPS calculations? Now, this is a listed company, EPS calculations is a must and not an SME. So, EPS has to be calculated. You need to complete the basic as well as diluted EPS calculations and to present it. So, as a result, there can be a chance of that being given along with EPS calculations, LKS 32, how treasury shares will be presented plus how it affects to EPS calculation. So that's important. And once again, let me take your attention to the first page, page number 1. Page number 1, second paragraph, the last sentence. SWH PLC continues its retail shop in Cinnamon Gardens under its direct management, and it also earns income from its properties which are rented out to its subsidiaries as well as to a few outsiders. Properties are rented. Very simple, straightforward. So there's no any hanky-panky explanations. The examiner has been very clear. I mean, the details have been very clear. When you rent out to properties, it has to be investment property LKS 40. If you analyze the past papers, I have given the analysis. I don't know how many of you all have gone through that. Just very few. And this examiner seems to have been a die-hard fan of LKS 40. Almost every other exam he has given a question. So there was no question from LKS 40 last time, and there's a chance of LKS 40 being tested once again. But there can be a danger. What is the danger? Because right among the group, the properties are rented. And we know LKS 40 talks about how the property is rented by one member of a group to another member of the same group should be recognized in the consolidated financial statements. And you heard me right, if one member within the group has rented a property to another member within the group, let it to be investment properties in the individual balance sheets, in the individual financial statements, yes, no issue, no problem. But just imagine now, it has been the parent company who rented properties. Just imagine the examiner in the unseen saying that one subsidiary company has taken a property on rent from the parent company, and now how are we going to recognize in the consolidated balance sheet? It can be another adjustment in the consol questions. So the properties that are recognized as investment properties in the balance sheet of the parent company should no longer be investment properties in the balance sheet of the group now, So the properties that are recognized and classified under investment properties need to be otherwise classified as owner occupied properties and should come under LK 16 property, plant and equipment. But it's not just that you deleting it from LK 40 and to rewriting it under LK 16. No, at your level, you can't expect the examiner to be that childish. Why? Because there can be some other complications like what? If the examiner says in the unseen that we have the accounting policy of measuring investment properties at fair value model, and property, plant and equipment at revaluation model, and there can be hell of a mess then. Why? Now in the individual balance sheets, in the individual financial statements, they have revalued investment properties under fair value model and fair value changes are taken to profit and loss. Whereas when you reclassify it under LK 16 property, plant and equipment revaluation model, all the fair value changes recognized to profit and loss need to be reclassified under equity. And under fair value model, they wouldn't have depreciated. You cannot depreciate properties under fair value model, but when you reclassify it under property, plant and equipment for which we apply revaluation model, you need to start depreciating. And once again, there can be deferred tax complications. Why? If you recognize deferred tax on fair value differences of investment properties, that has to be taken into profit and loss. But if you have to recognize deferred tax on fair value gains of property, plant and equipment, that should not go to profit and loss. You need to bring it to OCI, other comprehensive. So I don't think the calculations will be there, but you need to give the financial reporting implications. I mean, you can't do all these calculations at the end. Even if you do the calculations in this examination environment, there will be a lot of mistakes and blunders. But you need to advise, you need to comment, you need to recommend. So depending on the action verbs, it depends on how the examiner expects you to write. Please remember, those are highly likely if the questions in the unseen will be connected to the preceding. You know, after 2020, only the console question has been from the preceding, but we all of us, all the lecturers in one of the meetings held recently, made a request to connect it to the preceding as much as they can. Make it, related to the preceding. If not, these efforts will go in vain. Right. So I'm expecting LKS 40 investment property as SWH PLC is renting properties to the entities within the group and outside the parties. Right. Another target area, SLFRS 15. You know, this is a diversified conglomerate and they are into different business and activities. So their revenue is generated from various and distinct sources. Some are in trading, some are in manufacturing, and some are in agriculture, and some are in power energy sector, and some are in leisure. Last time, that was 2022 July, SLFRS 15 has not been tested. So we can't expect the examiner to ignore SLFRS 15 always. I'm pretty sure, trust me, hand on my heart, there will be a question from SLFRS 15 and that will be connected to one of the companies within the group. It can be either revenue recognitions in hotel and leisure. Maybe, say, a foreign group of guests will make a booking in the hotels and we will take over the total amount of the considerations at the time of making the reservation. They are supposed to make the full payment at the time of making the reservation. So they will come here and they will stay in the hotel over 3 months' time. I'm just giving you one example. how the revenue will be recognized. We will discuss them in our mock papers. As I said before, we will not discuss any questions today. So SLFRS 15 is a target area, and there is a chance of SLFRS 15 being tested. So we will discuss different styled questions, different natured questions in the mock papers on how differently the questions can be set from SLFRS 15. We will discuss that in the mock paper. Now you know, if you go to page number 1, I'm talking about the hydropower plant, which they were planning to start in 2019, but it did not work the way they wanted to work, and it was postponed. And there's a chance, I'm referring to page number 8, third paragraph, hydro mini power plant in Haputale. So this company has already entered into contract arrangement with the government, Ceylon Electricity Board, to supply their redundant and excess power to the government. There is an arrangement as such. Now, I have a strong feeling that there will be extra information in the unseen saying that this power plant will be started, or even without that being started, the question can be given on various assumptions saying that what if they started the power plant and they entered into the same arrangement with the government to supply excess power to the government through CEB, Electricity Board. Can it become a lease contract? So the details will be given, and you need to judge, you need to assess whether this arrangement can contain a lease. And then based on your judgment, maybe sometimes how the lease is recognized, how the lease is accounted, either in the books of the lessor or in the books of the lessee. And one important point to be taken into account, what is it? Excess power will be given to the government. Only the excess power will be given to the government, not everything. Now, as a result, in deciding whether a contract or an arrangement contains a lease, you need to look at two broader main aspects and dimensions as it been specifically identified in the contract, and being able to control the use of the asset. Now, asset is specifically identified. Why? The supplier does not have any more assets. He does not have any other power plants. He has only one particular power plant, and that is implicitly identified in the contract. Implicitly identified in the contract. And then the second criteria that is to be fulfilled in establishing a lease contract is what? The lessee or the user of the asset should be able to control the use of the asset. For the lessee to control the use of the asset, you must make sure that the lessee within the contractual period should be able to access to substantially all economic benefits, and that can be bit of a contentious area where the examiner in the unseen can give extra information so that you can make the judgment. You need to make the judgment there. It's a bit of a tricky point. So we can't exactly say for the moment whether that contains a lease because the information is not enough. It's not worded enough. It's not worded adequately for you to come to a conclusion for the time being. So I wish we will get a question from SLFRS 16. I must tell you, especially areas like SLFRS 15, 16, SLFRS 9 have been discussed to the depth and to the core without leaving any point out undiscussed. So as I said always, I want you to drink this cup of standard right down to dreg without just sipping the bubbles floating on the surface. And we have done it. You need to pay attention, especially SLFRS 15, SLFRS 16. Why? Those are targeted areas. SLFRS 16, after commencing the hydropower project, the entity has already an arrangement to supply the excess power they generate to electricity board. You need to assess whether it contains a lease. Right. Then let me take your attention to page number 4, the third paragraph. Third paragraph. Just after the end of terrorism in Sri Lanka, SWFM sped up the opening of supermarket outlets, including in the northern province and eastern province, in order to meet the increasing demand for supermarket services. Stephen was happy about the progress and advised his team to build up the networking and partnering with rural farming communities in order to improve the uninterrupted supply chain to support the increasing demand for fresh fruits, vegetables, and other essential food items from customers. He emphasized the importance of networking and helping farmers to buy their products. So they continue to explain that paragraph. So they have farms, and that is under which company? SWFM. Now, last time there was a question from LKS 41, and if you just went through the comments of the examiner, it is little surprising why the performances have not been up to the expectations and to the standard. Either because some of y'all have, not y'all, the people who sat for the exam last time, either they have ignored that part completely without answering, or even if they answered, they have not answered exactly the way it was supposed to be answered. Why? We are, little ignorant about certain topics like LKS 41. So we have always undervalued. It has a lesser chance of being tested. It's unlikely. That's your attitude towards LKS 41. So as a result of the performances having been poor last time, I have a strong feeling that even LKS 41 will be tested. Now, what areas? Now, if you acquire the properties for farming purpose, those properties do not come under LKS 41. You need to apply LKS 16 to recognize those properties under property, plant and equipment. That is one thing. So we will discuss the questions in the mock paper, but just to give you some ideas. And there can be sometimes bearer plants. Do the bearer plants come under LKS 41? No, it does not. Bearer plants once again come under LK 16, property, plant and equipment. And the examiner will test on how properties acquired for farming purpose should be recognized in the financial statements, how the bearer plant should be recognized in the financial statements, and how biological assets are the living animals or living plants used for agricultural purpose. Not that do we recognize all living animals and living plants under LKS 41. No. We will recognize living plants and living animals under LKS 41 as long as they are used for agricultural purposes. So different areas can be tested along with LKS 41. What are these different areas? How the properties acquired for farming should be recognized, let it to be under LK 60. And how the bearer plants are recognized, once again the bearer plant should be under LK 16, property, plant, and that has got nothing to do with LK 41. And how biological assets are recognized, You must recognize them under case 41. Initial measurement should be fair value less cost at the point of sale. Subsequent measurement should be fair value less cost at the point of sale, and fair value changes been recognized to profit and loss. And agricultural produce. So those are the different dimensions. Please, you need to pay attention to LKS 41 because it seems to have been one of an interesting area of the examiner. Right then, moving on. Now, especially if you go to the last paragraph where they talk about a competitor being acquired, Express Mart Private Limited, which has 20 outlets outside Colombo and has faced difficulties to meet its financial obligations. Except the group finance director, the other directors of SWH PLC agreed to acquire Express Mart Private Limited. Group finance director was of the opinion that the offer price is too excessive. Right. Now, Express Mart Private Limited seems to have got into a financial mess by now, and they are struggling for not being able to meet up their obligations, meet its financial obligations. Now, there's a chance of this company being given as the target company being acquired, and it has to be the subsidiary company which the examiner talks about in the console question. That will be the question. But apart from that being the scenario, the examiner can test it in a different perspective. How? And if this company has just been a bubble already, and it has not been in operation, they would have given up their operation sometimes back. Now it is only just a collection of assets, no operations whatsoever. The examiner can test under LFRS 3 whether we are acquiring an operations or whether we are acquiring just an asset. The examiner can test it. So we need to know how it becomes an operations or how it becomes just an asset acquisition, and you need to pay attention to those areas. So the examiner says, always another lengthy story which is looking like another case study will be given in the paper once again. So the students will be helpless. We wish it does not happen this time. And if the examiner says that this company, Express Mart Private Limited, has been just a bubble, it has not been in operations for quite some times, and then you need to judge, you need to explain, you need to advise how it is recognized, whether it is a business combinations or just an asset acquisition that comes under LK 16 can be a target area. You need to be ready, but we will discuss, in our mock papers, questions similar to that. SLFRS 8, never has that been tested. If you see the paper starting from December 2020 right up to the last time paper, it has not been tested. And one reason, because in the pre-scene the companies given were private limited companies. So there was no use to apply SLFRS 8 because it can come under SME, but this is not an SME. It has already now become a listed company. So there is no resistance for the examiner not to question SLFRS 8, and he is now exclusively, he is now independent, he can set questions from SLFRS 8. Segmental reporting. Here different segments have been given. Some businesses are into retail. Some business, I'm talking not about the parent company, I'm talking about the group. The examiners can set questions from the consolidated financial statements, from the group financial statements. Some businesses are into retail and some businesses are into manufacturing and distribution. Some businesses are into restaurants and hotels. Some are into power. So business activities are distinct and diverse. So this is going to be widely diversified, well diversified conglomerate. Now they need to do segmental reporting. But have they properly identified operating segments in accordance with SLFRS 8? And you need to answer. And have they identified reportable segments correctly based on SLFRS 8? So you need to identify. So in our mock papers, we will explain how to identify the operating segments with questions and how to identify reportable segments, whether retail has to be operating segments and then has to be reportable segments, manufacturing and distribution, what has that to be restaurants and hotels, whether it has to be reportable operating segments, power, we will discuss with supportive questions in the mock papers. So now SLFRS 8 can be another target area. One, the examiner can test this because this is a listed company for which full SLFRS apply, and there is no resistance and there is no reason why it cannot be applied. So be ready, it can be a target area. So now SLFRS 9 plus SLFRS 7. Now with this economic recession, almost all the companies undergo a lot of difficulties. And that may be in terms of collecting money from the customers. And that would have been the biggest problem. We can't expect a financial reporting paper without SLFRS 9. So you trying to answer a financial reporting paper without a question having been given from SLFRS 9 is like you've been in a wedding where there is no bride. So we need to expect a question from SLFRS 9, but it's not kind of conventional and traditional type of questions given. Maybe impairment. Impairment has been tested continuously, but I feel that trend will continue. Why? Because of this existing problem, existing recession, and almost all the businesses undergo the same problems, impairment. And there was a question last time, and it was not only from impairment, and basically the examiner has tested how it was initially recognized, subsequently recognized, and then the impairment. Remember, if you get a question of impairment of financial instruments, it cannot be equity investments, it has to be an investment in debt instruments. Now, SLFRS 9 can be a target area, not because there are indications or hints or tips given in the pre-scene, but the examiner in setting the paper will take the prevailing circumstances into account, will take the prevailing conditions into account. So we need to expect a question from SLFRS 7, SLFRS 9, and we'll talk about 7 later. Right. Now, another important area will be LKS 24. Why LKS 24? This is the first time we came across such a big group. I don't think we ever had such a big group before. Now, in the consolidated financial statements, you need to do the disclosures of LKS 24, related party disclosures. Related party disclosures. The standard looks simple, but the questions in the paper have been hard to do. It's not about the calculations, but it's about the disclosures. Now we know LKS 24 says you need to disclose related parties only when transactions occur among the related parties. But there's one particular relationship which you need to inevitably disclose irrespective of whether the transactions have occurred or not. So what is the relationship? Parent and subsidiary. Then the list of the subsidiary companies need to be disclosed. Why? I can't say almost all the companies are what? Subsidiary companies as far as SWH is concerned. So LKS 24, if you look at the past paper starting from June 2015 right up to the last paper, still the examiner seems to have been a die-hard fan of LKS 24. 24. Please be ready, and that can be another target area. So in my list, I have shortlisted LKS 4 is a target area. I have given you the reasons. SLFRS 15 can be a target area. And we have done about 20 videos of SLFRS 15, cover up everything. There's nothing left undiscussed. SLFRS 16 seems to be a target area. LKS 41 is a target area. LKS 32 is a target area. 33 is a target area. SLFRS 3 is a target area. I said why. SLFRS 8, 9, LKS 24, SLFRS 7. Why SLFRS 7 can be important? Disclosures of financial instruments. There was a question even last time. The performances have not been as good as sound as it was supposed to be. Why? Once again, the students are ignorant and you do what? Selective learning. And I am pretty sure it is not because some hints and tips are given in the unseen. No. You know, in the prevailing circumstances, with this economic ongoing crisis, especially the risk of the financial instruments need to be disclosed. And there will be different kinds of risks that are required to be disclosed in the financial statements. And I strongly feel, taking the prevailing circumstances, conditions, and the decisions taking into account, there is a possibility of SLFRS 7 being tested, but no supporting hint or clues given in the pre-C. SLFRS 10, remember, now in the console question, you cannot answer without you knowing SLFRS 10, especially the control model. In particular control model, you need to be thorough in the control model. Why? If the unseen says that this company has been acquired, it has been acquired, there cannot be anything else to the contrary, because the last paragraph of page number 8 says that they have already completed the acquisition, for which the information has not been given in the pre-C. Now, if the control has been acquired, how do we justify that the control has been acquired? And you need to analyze the control model. Without you analyzing the control model, you can't come to the conclusions. So be thorough of the control model in SLFRS 10. Please, that is a must. That has to be done. Control model has to be connected in your answer. Without you connecting control model, you cannot conclude whether it was the control that was acquired, whether it was the significant influence that was acquired. Please make sure you do that, and we will do the questions accordingly in our mock papers. LKS 12, taxations, LKS 36, impairment. because if you once again take the recession, lot of indications are there. Almost all the businesses have lot of enough indications that there can be possible impairments of assets. So a question will be possible. And also if you just go through the balance sheet, they have given property, plant and equipment, right of use assets because there are leases, investment properties are there, as I said before, intangible assets are there, and other financial assets are there, deferred tax assets are there, inventory, receivables, related party disclosures, other financial assets. So then stated capital, reserves, retained earnings, non-controlling interest, interest-bearing loans and borrowings, lease liability, deferred tax liabilities, capital grants, and employee benefit liability. So even if you just glance through the balance sheet, LK 16, SLFR is 16, LK is 40, LK is 38, and SLFR is 10, SLFR is 9, LK is 2, SLFR is 9 once again, LK is 24, and LK is 12, LK is 90. Those are the related standards for the items shown in the balance sheet. So that is all about it, ladies and gentlemen. And this is just a small, snapshot in a nutshell. It was not a thorough, discussions of the possible questions. No, we will do it very soon, and we will be at least discussing 2 mock papers, including the target questions, and we will it's guaranteed, trust me, hand on my heart, we will discuss minimum mock papers before the exam, and you need to practice a lot. And once again, we appreciate you joining our sessions today, and we will let you know when the mock paper discussions will be, and it will be over to Nilendra sir to discuss the RMM part. And thank you once again for joining the session.
Hello, students. So, very warm thanks to Chandana sir, because when this idea came up for this discussion, because of a lot of student requests for this kind of a session, because students from a holistic point of view, from both the financial reporting area as well as from the governance, risk and that particular area, just to have one particular power session. So then you all will also get focused, because students, as Chandana sir said, we hope you would have already gone through the pre-scene, and what our practice and what our general experience with our students is, for some students this has not yet been, you have also touched upon, right? Until the lecturer says, you still wait and wait and wait. So students, there are a few important points that I picked from the Chandana sir's discussion, where he was pointing out with regard to certain going concern relating areas, the risks that the market is currently going through. So before I start my session, just to update you on certain areas in the market. Now, if you see, students, the current economic environment in our country, because this is mostly a domestic case, the country has gone through in the previous 6 months, previous 6 months lately, a very torrid time with regard to the economy, right? So, majority of the companies in this particular group, as Chandana sir clearly explained, it's a kind of a very complex kind of a group where you had different subsidiaries, right? If you take it, students, there is the hotels, the tourism sector, the restaurant sector. So they have acquired earlier a hotel in Negombo. So tourism sector, you all would have seen going through a really tough and rough patch these days. So from the governance perspective, from risk management, from risk of material misstatement perspective, going concern is an area that I am always looking at. And apart from that, I see certain issues for them. They have manufacturing as well. So obtaining raw materials, that particular area, right? The overheads have also gone up rapidly. If you have seen the electricity bills, things have gone up. So have some general idea, right? General knowledge on what's happening around the market industry, because that again is very important. when you are discussing this. So students, just to change our presentation, let me get it out. Okay, so students, so building up upon from what Chandana sir has developed, students, I am analyzing this pre-scene from few angles, right? The first of all, I'm analyzing this from corporate governance, right? The first area. Then from corporate governance, students, I'll be moving on to risk management, right? And then thereafter, I'll be moving on to the ethical consideration, how code of ethics is coming into this, right? Then risk of material misstatements from the accounting standards that Chandana sir has said. So how we can get it into risk of material misstatements. Then students, non-financial reporting, right? Integrated reporting, that particular area. So how it can be developed upon. So under these headings, these topics, let's see how we can go to and what are the important areas that we have to focus on, consider on. So let's take first, students, I will not go through the entire list, right? As Chandana sir said, because we have to save our time, as well as we have to build upon some certain questions, mock exams on this. Just I will go through some salient features, some salient points that we have to focus on in corporate governance. Students, you would have seen SWH, right? This group is listed. So as we have seen, 50% of shareholding is now being held by the general public, and the balance is by the family, right? So one thing, you have to be thorough with the listing rules of CSE. CSE listing rules, you have to be thorough. So I will share with you a set of listing rules, right? Listing rules tika mama atheka share karanna. So listing rules is a mandatory compliance requirement for this company. So financial reporting, those kind of minimum capital, all these listing rules related areas, really important. And code of best practice for corporate governance is an important area for this business to focus on. So I would say in the analysis, so listing rules, corporate governance is a mandatory area which you have to also go through, and also in the exam also I am kind of suspicious that the examiner may try to test. Then the strategic focus of the business. The business, what's their strategic focus? So students, the vision and mission examiner has provided to you. So vision and mission to be evaluated. So we may have to evaluate the vision and mission with critical success factors and KPIs. So sometimes we may have to develop a balance scorecard. So build upon that. Look the theory with regard to balance scorecard in performance evaluation. How balance scorecard can be developed, and identify certain critical success factors for this business, right? Maybe students, enhance in the market share, right? You would have seen in the numbers, the profits have come down. We will discuss that separately. But the balance scorecard, the critical success factors, and developing certain definite KPIs for this business, it's really important that we have to focus on. So profit wise, then students, I would say from market wise, so let's say thereafter, sometimes the capital adequacy from that side. Let's see how we can develop some KPIs for this particular company, for this group, right? So because the examiner has already shared certain KPIs with you, right? Profitability coming down, gross profits coming down, revenue coming down marginally. So he is touching upon those KPI points. So we may have to also select certain critical success factors of the business, KPIs to be established and evaluate. Very important. And students, the other corporate governance important point that I wanted to discuss with you is that domination of the board. Board domination. Who dominates the board? Right? Who dominates the board? Just put that in the chat box if you can remember. Right? How the board dominate current? If anyone can remember. Chairman, who's that name? Nama not Sara. Who is that? Steven, no? Steven. Steven is the guy who is dominating the board. Students, when the board is dominated by one person, Steven is there, spouse, nay, lady, no. And also you would have seen the family members gradually, his children is also coming into the business. So one child is there that of Steven's coming with 1 year experience in the industry. Have you seen that? I think that IT person, right? So if you see that the board is fully dominated by the family. When the family dominates the board, what happens, students? We have seen in the country, in political environment, when a family dominates the family runs the show, how the governance is compromised, right? So if that happens in the company, then students, we have a problem that the governance of this company come into question. Because we have seen Steven is having a dominating attitude as well. You would have seen, right? Steven a dominating attitude. What's that attitude? He just puts people, provides them targets, right? And drive thereafter. Now this dominating attitude, students, is good, right? In good times. When the business is doing well, everything is running good and show is nice, it's well, the dominating attitude. But students, when the things are not that good, things are getting against you in a kind of an environment like this, students, then this Steven's attitude will become a trouble, will become a problem. Why? Because students, with the age of this Steven, this particular chairman, the managing director, with this age, he will become, he will become bit arrogant as well. Arrogant we have seen it, no? So that dominating capability will become a problem for the business. Students, so we have to balance it out. Api kohomada me dominating character balance karanne? How we are balancing in the board? Anyone can remember? Just put that in the chat box.
The board component has to have a majority in ED because of the chairman is not independent.
Fantastic, right? Natasha, that's the point. So when the board is having kind of this dominating behavior, dominating personality, family, right? Ideal good governance principle is board has to be non-executive director should be the majority. Appoint non-executive directors, no?
Need to appoint more independent directors.
Need to appoint, Tehan, thanks. Need to appoint more independent directors. So student board balance, so we have to balance out the board by putting more non-executive directors, and then students, ideally, independence is also important thing, right? That's how you balance it out. So if the examiner asks you to recommend, as Chandana sir clearly said, you have to spoon feed to the examiner with the information. So tell him this is what we have to do. I'm recommending this. I'm saying you to do this, right? Majority of the board has to come with this kind of people. Non-executive directors. Independence is a must. If you can remember how many non-executive directors they have, non-executive kiyak innawada? Case එක මතක නම් කියන්න. If you can remember the case. How many non-executive directors they have? They have 4 non-executive directors. I think it is not enough. Eka madi. That's not enough. Students, ideally when you have a board members of, I think 12 they have, right? More than 7, about 7 should be non-executive. So those are the points that you can come up, and the examiner loves those points, right? So come up with those points. So that's one thing that Steven's domination that we have to mitigate. And students, you would have seen in this company, is there any chance for performance? Is there any chance for commitment, for competence? Dakshayata sudusu dana hambenawada. All these are good governance, corporate governance. How about the commitment to competence? Chance ekkomada. Senior independent non-executive director, no? SNIED, right? That has to be there. Tehan, thanks.
Says that the chairman rewards it.
Right. See, now this employee performance. Now, if you are a company or a company run karna, people has to be rewarded for performance. But in this question, you would have seen Stephen rewards people based on the loyalty, right? The similar way that most of the places in Sri Lanka, how they reward the people. People will be rewarded based on loyalty. Is that good governance, students? Those are areas that we have to question, right? Questions may come out from these, right? So Stephen rewards his loyal employees. Performance evaluation, balance scorecard, මේවා test වෙන්න පුළුවන්, right? These can be tested. No proper performance evaluation and only loyal employees are rewarded. Students, when that happens, SLA was 240, fraud risk factor that can be. Put these into the fraud triangle. මේ ටික fraud triangle එකට දාන්න. Loyal employees are the ones who are committing the most frauds, right? Chairman may think that he is loyal to you, but they are the ones who are committing most frauds. So connect this to SLOS 240, fraud risk factors. Then the next point that I want to tell you, when you reward people like these, students, there will be a dissatisfaction among other people. Good governance lost. So ideally, this practice has to be addressed in the exam. Then strategic options they have. Chandra sir discussed what you call from the financial reporting aspect, what are the accounting standards related areas. But from our end, students, we have to take the strategic options they have. They are always going with acquisition strategy. Then strategic options more into diversification, differentiation. They are into retail supermarkets, retail shops, hotels, dairy business, chocolate, confectionery. Students, different portfolio of products. Hotels, tourism, chocolate, confectionery, everything is there. Some certain related diversifications and unrelated diversifications. When you take from the strategic options, අපේ governance වල තියෙනනේ strategic options part එක, that particular part. So students, we think about cost leadership as well as differentiation. But here you have differentiation, diversification, everything is there. Certain diversifications are, students, like takkali and bolt nut. What is that? It's fully unrelated. So at that time, how you manage that? So think on that as well from the strategic options perspective. So when you have that kind of a diversified group, Chandra sir ආඩ ගහලා පෙන්නුවා ඒ flow chart එක, the diversification. When you have that much of a diversified group, students, from governance perspective, you need to have a highly skilled professional management. If you don't have a professional skilled management, I would say, tata bye, Stephen, you can fly a kite at a time like this. So get it in that way. Then the next point, Stephen's spouse, on the other hand, students, coming up with a different approach. She is very practical, pragmatic, participative type of a business lady, right? So lady wa ආපු ගමන්, Stephen ගේ නෝනා මහත්තයා ආපු ගමන් අපිට board එකේ වෙනම කතාවක් මැවෙනවා. What is that, students? From governance perspective, you have Stephen on one side. On the other side, you have his wife, who is a female. So what concept that the examiner is testing there? Gender diversity. That's the point. Diversity, right. Right, good. Diversity aspect, students. Can you remember? There is a special diversity topic that we have discussed. Diversity is an important part. So for this long, one of the success of the company would have been, students, that diversity, right? Husband is on an aggressive mode and wife on the other side, kind of a very calm, quiet mood, right? So that combination is the diversity that is bringing in. So touch upon that. Diversity, look at diversity. So board responsibility, diversity, gender balance, these areas. So she is on to more consultative approach, but still is the family, right? Still is the family. So as we discussed, non-executive directors, independent non-executive, and appointment of a senior independent non-executive director is a must for this particular business student. Then students, thereafter, social and environmental perspective, ESG, ESG, environmental, social and governance perspective. That again may be an area where we have to look upon, because students, this is more or like, if we relate this to a kind of a classical current business in Sri Lanka, what is the most similar one? Training, local communities, dairy farming, right? Retail chains. What sort of business that you can relate this? Tika Cargills again, bit tika Cargills, right? Bit of Cargills, but right, I won't relate the attitude of the chairman and everything which is related here to that business, but students, dairy farming, right, local community development, that is an important part. So corporate governance, right, students, when you are coming on corporate governance reporting, that community building, capacity building, that those areas may also be discussed. So family dominated business, students, that's the important part. And the bringing down of shareholding of general public to 40% will become a negative aspect with regard to corporate governance that we have to touch upon. Then next one, board balance. Students, this board is not balanced. Huh? This board is not balanced. Why? Non-executive directors are not adequate. For this board, first point, non-executive directors are not adequate. And also, all subsidiaries, students, if you have seen that subsidiaries, do we have any non-executive directors at the subsidiary level? Can you remember? No, all directors are executive directors. So can we expect fair, independent judgment in those subsidiaries? No, frauds can come from any subsidiary. Mistakes, exceptions, frauds can come from any subsidiary. Subsidiary students, I don't expect any good governance in these subsidiaries. Subsidiaries may be students run by boss gay yes men. You know boss gay yes men, right? You know family business, right? If anyone is good for the boss, he is the one who is running the show. So students, these subsidiaries may be run by bosses yes men. Stephen Gay Goleo, Hondama Goleo will be running the show. Hondama Golea is the one who is committing the fraud. Get the point? And fraud has happened also, no? Can you remember? And we call, and whatever the non-executive directors who are currently also in, we call them rubber stamp directors. Can you remember rubber stamp directors in corporate governance? Maybe those kind of, whatever Stephen says, they may be approving it. Rubber stamp director students, we have seen in a corporate case in a foreign country. Can you remember that? In a foreign company, we have seen it. The rubber stamp directors. What is the company? Starting with E. Oil giant that was gone bankrupt. Rubber stamp. Enron, rubber stamp director students. So maybe all other non-executives are also maybe rubber stamp director students. Maybe we have to address that particular point also in the exam. Then on a plus side, right now we can criticize everything. From plus side, important board subcommittees are there, right? You have audit committee, you have the remuneration committee. Sorry, audit committee is there. Then remuneration committee, related party transaction evaluation committee, that is also there. So subcommittees are there, but in the exam, we have to see whether those subcommittees are effective or not. Because audit committee effectiveness, I have a problem. Whether the audit committee is effective or not, I have a problem. Why I am saying that, students? There are massive frauds in the business. For so long, the storekeepers, the store managers, the suppliers, and the finance department, everybody colluded and committed the fraud. Can you remember that? For a long period, finance department, store managers, suppliers, all getting together and committing the fraud. Right? Right? So that is collusion, students. We call it collusion. So collusion happened. So I doubt, I criticize, I have a concern about this board subcommittee's effectiveness. So that's why we say, that's why we discuss these subcommittees should be strengthened in this particular company. And Stephen's attitude of bringing down shareholding of public to 40% means Stephen is always thinking about making this a family affair. Get my point? Lokka balanne make a family run ekak thamai denna hadanne. Get the point? He would have obtained he would have obtain money from share issue for his expansion plans. Now the business has gone to a certain level. Now he is trying to curtailing down it to 40%. වැඩේ කරගත්ත දැන් public shareholding අඩු කරන්න යන්නේ. That itself is a kind of an alarming signal with regard to the governance. Audit committee chairperson, students, CA member, that's good, accepted. Nomination committee chaired by independent non-executive director. Students, one important committee we don't have a clue. අපිට එක clue එකක් නෑ ළමයි, එක committee එකක් ගැන. What is that committee? In the pre-scene, we don't have a clue on one important subcommittee. Nomination. And also remuneration. Nomination ui remuneration ui දෙකේ පොඩි ප්‍රශ්නයක් තියෙනවා. I don't think Stephen likes a nomination committee because he wants his people, right? I run the show, I want my people. Nomination. How about remuneration? Now, basically, students, remuneration committee is the committee which is deciding the remuneration of all the executive directors. But when the chairman is so dominant, students, he doesn't like a remuneration committee as well. So we can recommend to the examiner having a remuneration committee, nomination committee with adequate composition, right? Students, they on the other side, on good angle, they have a code of conduct for the business. They have a code of conduct. They also have some performance standards. I will make sure that this is available with you, right? Availability of proper information flow is there. Go through Mandela matrix, right? Everyone go through Mandela matrix. Can you remember? Mandela matrix, students, we used to analyze stakeholders with interest and power. We identify key players. We identify the minimum effort, right? Keep informed, keep satisfied. Because with unseen information, we may have to analyze the stakeholders of this business. So Mandela matrix is an important area where for some certain decisions, if you are going to wind up a particular area, if you are going to, let's say, go for a diversification, winding up, then we need to have evaluated the stakeholder impact. For stakeholder impact evaluation, Mandela matrix is an important area. So look at that. Okay, right? KPIs. Students, the performance of the group is coming down. Mama me performance පැත්ත මම කතා කරන්නම් going concern එකේදී, right? So develop KPIs on that. So that's basically on corporate governance, students. I just rushed through, but when you get hold of this, you can discuss on these other areas. Students, risk management. The next, they have, students, a risk management committee. But students, this Stephen, our big boss, is kind of a high risk taking approach he is going. Students, at that time, we may have to have in our mind the control environment which is coming in COSO framework. COSO framework, 5 important elements you should remember. Control environment, information and communication, risk assessment, control activities and monitoring. COSO framework and control environment, we should have an idea because students, Stephen is highly risk taking and he is promoting his yes men. So structure of risk management really important. Even though we have an audit committee, I am doubt about its effectiveness. So COSO framework, high risk taking approach. I would say this group as a group should have a GRM function. Group එකක් විදියට අපි recommend කරමු GRM function එක. Group risk management function. Students, since you are in hotel, since you are in retail outlet, since you are in dairy, whatever, because group wide risk we have to analyze. Group wide risk we have to manage. Very important. Then, students, next part. Stephen just fires employees like nothing, huh? Can you remember? වැරද්ද දුටු තැන එළවා දැමේ. If you can remember the case, Stephen is kind of that dominating. අහුණාද එළෙව්වා. අහුණාද එළෙව්වා, students, if is from an entrepreneur mindset, it is okay. But from accounting mindset, we have a problem. What is that? Everybody will not tolerate අහුණාද එළෙව්වා. what will happen? Sometimes people will take legal actions. Litigations will also be there. At that time, then only students, the provisioning, disclosures, right? Then the Chandana sir will have some work for that, right? And from my point of view, risk of material misstatements will also be there. මගේ පැත්තෙන් අපිට material misstatement පැත්තකුත් එනවා එතකොට. Okay. So students, no proper inquiry on disposal. Dismissal වලට කිසිම inquiry නැත එළෙව්වා. Possible legal action for unfair dismissal, fear, dominance, lack of innovation. People will not try to innovate student in an environment where you are dismissing people like nothing. එකෙක්වත් කැමති නෑනේ එලවන්න, right? So මිනිස්සු බයයි. So is it good control environment or poor control environment? Summary dismissal. Poor control environment, everybody. So COSO, we have touched upon. Students, they say adequate controls available, but I have a doubt. Controls තියෙනවා කියවට අපිට doubt. Examiner says adequate controls available. එහෙම කියලා එයාම කියනවා තව එකක්. What is that? Frauds happening. වරකම් වෙනවා. Right? Controls available, frauds happening. ඒක නිකන් operation success, patient died වගේ තමයි. Controls available, frauds happening. That is a problem. Okay? So during the year detection of a fraud happened, we have to test the effectiveness of the internal audit function. Examiner says they have an internal auditor. Internal auditor කෙනෙක් ඉන්නවා කියලා examiner කියනවා. And examiner also says internal auditor is reporting to the audit committee. Right? That's good. That's good. But effectiveness of the function is the problem. So let's see who is the chief internal auditor. අපි බලමු කවුද internal audit ලොක්කා කියලා at the unseen. Who is the chief internal auditor? So what type of work he has done? Because internal auditor could not find that fraud. The fraud එක අල්ලගන්න බැරි වුණා. Right? Those are the frauds that were come upon. But how many frauds there will be concealed? Right? වහපුව කොච්චරක්ද ළමයි? Problem. So the next one, students, company takes ERM, enterprise risk management and integrated risk management too serious. So we will go through those areas. Integrated risk management function is also available, but I propose group risk management for this company. Integrated known, right? All aspects, procurement, sales, financial reporting, everything should be taken together. Integrated risk management should be there. But let's propose a group risk management, GRM function as well, where different group companies are there, different risk profiles, different risk the company is exposing in. So you would have seen now, even though how successful they are, කොච්චර ඒගොල්ලෝ success වුණත්, see now the problems are coming up. Profits are going down rapidly, 85% profit drop, right? Turnover going down in certain companies. Problem. ළමයි ownership change එකක් වුණා මේ දවස්වල ලෝකේ ලොකුම company එක. In globally, one of the largest companies, there was a ownership change. Once the change happened, the entire company, right, turned upside down. What is that? Anyone can remember? Twitter. Elon Musk acquired Twitter, but Elon Musk, when he acquired students, there were a lot of, now this is the change management, no? The change for Twitter was that bad, right? Change for Twitter was so painful. With the entrepreneurial skill of Elon Musk, he will turn it around, right? He will turn around. We are so positive about that. But see the pain that the company is going through. Employees losing jobs, right? The Twitter, the offices are closed down. It's a pain. So if this company is also to go through that kind of a change at the unseen එකේ මෙහෙම change එකක් වුණොත්, maybe acquisition, maybe students disposal of a particular group. සමහර විට ළමයි අර නිගම්බෝල තියෙන හොටෙල් එකට සමහරට සුද්දෙක් වෙන්න පුළුවන් ගාණක් අරගෙන ඉන්වෙස්ටර් කෙනෙක්. Maybe, right? So if that happens, how this go through? Because then students, that yes men of Mr. Steven will have to go home, right? If a proper institutionalized, properly governed company comes as an investor, then the problem governance comes. Then student, then thereafter coming all the disaster management planning you have to go with. Okay. So we have seen collusion, availability of frauds, all these are there. So fraud risk factors, SLAS 240 which we have done, go through. Ethical considerations, students, we are moving on. Code of conduct available in the business. That's okay. Code of conduct to management and employees available. This will impact the overall ethical behavior of the company as well. In the exam, students, examiner may ask you to propose, I would say, improvements to code of conduct. Code of conduct improvements examiner again illanna puluwan. So let's see how to do it. Students, favoration by Stephen on loyal employees being a tough character. Favorations, is that good ethics or bad ethics? Poor ethics, right? Poor ethics. So code of conduct aims to strengthen the reputation of the company. That's what the examiner say. Exam, propose improvements to code of conduct. Examiner may ask from you. Okay. Students, anything more to add? තා මොනාරි ඇඩ් කරන්න තියෙනවද ඔයාලගේ පැත්තෙන් මේ දෙකට? අපි දැන්ට corporate governance we have gone through, then ethics we have gone through. Anything to add that you have identified? Now until this time Chandana sir and myself have identified our issues. No, you will have your own perspective, right? ඔයාලා කියනකොට ඔයාලට click වෙන්නේ නැති සමහර දේවල්. Anything that came into your mind that you wish to share? Integrated reporting, no? I'll be touching that on non-financial reporting area, because integrated reporting definitely is an area that will be tested. Because in one of the examiner kind of lecturer meeting that we have also gone through, where, as Chandana sir clearly said, lecturers were also so adamant, why you are putting a kind of a fairy tale sort of a pre-scene, and at the exam you are asking something else. So at that time this integrated reporting was an area that was highlighted, discussed as well, because not much of questions are coming from integrated reporting, but we as a finance profession, we are going towards integrated reporting. So it will be an area that I also have a doubt and greater probability that may be tested. Right? Good point, right? Thank you. RMMS, risk of material misstatements. Stephen puts immense pressure on the management to achieve target. Students, when you pressurize management to achieve targets in this kind of an environment, this kind of a market condition, what will happen? Frauds, no? Fraudulent financial reporting. Api management to push karanna pura limit එකක් තියෙනවා ළමයි. If you push them harder, what will happen? They will resort to fraudulent financial reporting, window dressing. Those kind of activities will also come up, right? Sometimes, students, these figures that they have reported, I have a doubt that they were achieved in good way as well. So fraudulent financial reporting, window dressing, that fraud triangle, fraud risk factor, students, just go through. Okay. So, and also internal controls over financial reporting function. Who approves, how audit committee approves the financial statements, how they go through the accounting policies, right? Go through them. Then the next one, Chandana sir addressed the point, hit the nail on the head. What is that? Related party disclosures, right? Risk of material misstatement may be there. Why? When the company is dominated by a family and when they have yes men in everywhere, students, related party transactions, 50% public ownership will not know what these people are doing. Okay. සාමාන්‍ය shareholders දන්නේ නැතුවද මේගොල්ලෝ මොනවද කරන්න කියලා. Related party disclosures. We know LKS 24, there are certain disclosures that to be done. And SLUS 570, related parties. Control significant influence, close family members. කාරණා තුනයි. Control significant influence, close family members. Have a keep a kind of a close eye. Related party transactions. If not done, students, risk of material misstatement. Accounting standards say you have to disclose, but not done. Misstatement, risk of material misstatement. We may have to address that at the audit reporting. Then students, going concern. What are the lokuma serious but doubt take maker? Going concern. Because we have seen even, I would say, very stronger companies finding it difficult to survive now, right? Restaurant and hotel chain business. profit before tax dropped by 83%. Students, hotel leke profit එක PBT එක 83% drop. Then manufacture segment profit dropped by 37%. That is as at 31st March, right? The classic disaster happened, students, after March. Okay, so අපි රුපියල පා කරන්න ගත්තේ මාර්ච් වලට ඉස්සෙල්ලාද මාර්ච් වලට පස්සේද? Can remember, students, it's after March, right? And also Sri Lanka declared bankruptcy after March or before March? අපි bankruptcy declare කරේ after the before the? We declared bankruptcy after March, right? So students, interim financials, have a closer look. Retail segment profit dropped by 55%. දැන් මේ drops ඔක්කොම දකින්නේ. Cash flow drop, unable to sustain the projects. Now management is talking with renegotiation with banks. Loans renegotiated. What is that? මොකද්ද මේ renegotiation කියන්නේ ළමයි? බැංකුත් එක්ක. What is the renegotiation? As a government, we also do that. What is that? Unable to pay loan, so we are now in the process of renegotiation. Renegotiation with the banks, unable to support our expansions. Which indicator is that?
Going concern issues indicator.
It's a material uncertainty of going concern, no? Right. Yes. You get my point? Going concern will become a seriously tested area in this question. මේ වගේ ඒවා දීලා ඉවරලා going concern test නොකරොත් ඒක එතනත් ලොකු problem එකක්. That's a kind of a what you call a fundamental issue with the pre-scene. So therefore, students, if this comes, I would say going concern has to be tested, students. All these issues are indicators that the company is not doing really well, right? Ideally, at the exam, they may have to, I would say, give up certain subs, right? Subs samareta වහන්න වෙයි, right? So they may have to give up. We don't know, right? So be prepared for going concern. SLAS 570, watch the video. Possible indicators of material uncertainties of going concern. Audit reporting part එකත් පොඩ්ඩක් බලන්න. How do you report? There are 5 to 4 reporting considerations that we have discussed. So go through them. Then non-financial reporting, which you have highlighted, right? Stevens prays for all stakeholders, including customers and suppliers. Steven says, we are thoroughly grateful for our customers, our suppliers. We are thoroughly grateful. Students, if that is the case, Steven is looking at some sort of integrated reporting, holistic reporting type of approach. So non-financial reporting, integrated reporting, and sustainability, ESG, environmental, social, and governance reporting may be important. So non-financial reporting, students, go through integrated reporting, the capitals. There are about 7-8 capitals. Matakayne, financial capital, human capital. Go through the capitals. Integrated reporting wala. And basic elements of integrated report. Set of integrated financial report, basic elements. Elements tika mataka tiyagan. The capitals can remember. Students then go through GRI standards. What is GRI stands for? Katare mataka? GRI. Global Reporting Initiatives. The 100 series, the 200 series, just go through GRI standards, right? Stakeholder perspective they are discussing. Client raises requirement for integrated reporting. So students, integrated reporting, very high probability of testing at the exam. Okay, right, so just to sum up, right, on the governance, students, as usual, a lot of openings examiner has given on various aspects. So I have elaborated, summarized this from about 4 to 5 aspects which we can now build upon our discussions in the coming days, right? ඉස්සරහට යන දවස් ටිකේ අපිට අපේ discussion එක develop කරගන්න. These are the areas that are useful for us. Okay, so students, this practice.
She's asking, is it possible to have a merger of 2 companies? And
Definitely. Students, one area of managing risks in this kind of environment is going for a merger, no? because the Central Bank of Sri Lanka is also thinking of and also thought of merging finance companies when those finance companies are not doing well. So merger is one important aspect of surviving in the market, right, in a difficult time. So merger will become kind of issue. Likewise, right? So in the coming days, propose whatever you also see from this case, because from your practical example, experience that you have also worked, propose to us, right? What are the areas that we have to focus on? Students, I will make sure that this particular presentation is available with you and where you can thereafter build upon. And in the coming days, right, we are going for mock examinations, mock exam paper discussion, and through this pre-scene, students, we will also develop certain questions and we will discuss them inside the class as well, right? So Chandana sir, any concluding notes from you? Right, so students, this exercise we did as a support for you, for everybody, because as Chandana sir also said, highlighted, the pass rates of this particular paper and all strategic level paper students is not satisfactory. So we also wanted from our end as lecturers to support our students, because there is a huge vacuum of chartered accountants in industry, because people are migrating, and in Sri Lanka there is a huge vacuum, and overseas also you have a lot of opportunities, so to grab those opportunities. So students, let's take this as a launching pad, right? Make up patangamu metherin වැඩේ පටන් ගන්න. Take this as a launching pad, students. In the coming few weeks, we will focus well, right? And we will do a really good job, because every time, my experience with our students is, if you manage the last few weeks properly, students, you will definitely do really well. අවසාන සති කීපේ හරියට manage කරොත් හොඳටම කරන්න පුළුවන් ළමයි. That's why the team of lecturers here are supporting. So from Chandana sir and myself, students, thank you very much for all of you, and for the Infinity team for providing this platform for us to engage with our students. Thanks to the team as well who are providing us the support. Just one moment, students. There is a kind of a student concern that we have to address. And students, until Chandana sir getting ready, just to tell you, students, don't give up hope, right? What level you have studied, right? Up to what level you have studied, still you can make it happen. Right? Strategize well, smartly study, do a kind of a hard job, right? So, Chandana sir.
Now, someone is asking whether there is a possibility of a merger. I must tell you that there is nothing called merger in financial reporting. There can be merger questions in finance management, but not in financial reporting. Why? SLFR 3 says, always in whatever the form in which the console questions are set, you need to identify the acquirer. And to identify the acquirer, SLFR 3 has given enough indications. So without you applying SLFR 3 criteria in order to identify the acquirer, you cannot do any console question. So in a merger, what happens is A is there, B is there, and A and B will be forming into another company called C. So no longer do we see company A, neither do we see company B, and ultimately it becomes company C. So there's nothing as such in financial reporting. Why? SLFR 3, whether you like or not, you have to identify the acquirer. You need to go to, like say, the company that transfers the consideration has to be the acquirer. The company from which most of the directors will be appointed should be the acquirer. We will discuss how we have discussed them in the videos. So enough criteria have been given. You need to go through them and to identify the acquirer, and that becomes the parent company. The other company becomes what? A subsidiary company. And we have another, it is say pronouncement issued by CS Sri Lanka, entity run the common control. So don't get the wrong end of the stick. That is not anything as such mergers. There's nothing for, there's no accounting for merger. We do mergers in financial reporting, but not financial management, not in financial reporting. It has to be an acquisition. There has to be an acquisition. Even if you do merger in finance management, by applying SLFRS 3, you identify who the acquiring company is, and that becomes the parent. I hope it was clear. And we will see what the possible console questions will be looking like in our mock papers to be discussed. Thank you.
Okay, so students, any more questions, any more areas that you have to get it clear? Right, so hope all is well. So students, as we discussed, keep this as, I would say, launching pad for the exam. Take the courage. This time itself, I'll go through this. Because you have to do it, right? You got to do it. So in the coming few weeks, right, stay in touch with us, right? Anything is there, just get that cleared. So make it happen, students, right? You all can do it, and we all as a team, right, because we also are part of this particular system. So we all can improve our pass rates as well. So that means we can call it a day, students. So this will be uploaded to YouTube as well, right, this session. And in our class, let's discuss this further and further. We will build upon this. So thank you, everyone. So we'll meet up again in one day, students, as chartered accountants, all of you. All the best to you. All the best for your examination. Thank you very much.